Anyway, so
That's awesome.
this question and answer, I thought this is what sparkled me, what got me a little bit riled up here this morning. The question was, could crypto meaningfully replace the dollar, or does it pose different dangers altogether? And the answer, crypto is now an alternative currency that has its supply limited. So all things being equal, if the supply of dollar money rises and or the demand for it falls, that would likely make crypto an attractive alternative currency. We're live. Welcome back to Token Narratives. I'm Graham Stone, joined by news and research gigabrain, Mr. David Sensel. How you doing today, sir?
Doing well. Friday, a little rainy here, but otherwise good. How about yourself?
Yeah, pretty good. TGIF. Gut check. Gut check.
I see you. I see you rocking the Bitcoin news.
Yeah, I just changed into this bad boy at the last second.
Looking sharp, buddy.
Got to rep the brand. Yeah, I mean, David, we got a lot of cool stuff coming up here. I'm excited about some of these interviews that you're getting lined up for both Korea Blockchain Week and Singapore Token 2049.
Yeah. That's right.
I always forget to
not give any
the year of it. It's 2049, right?
Yeah. It's also, just from a copy perspective, I know you'll appreciate this. It's one word, which always bothers me a little bit.
Yes,
right? So you write token, no space, token 2049. I get what they're doing, but
is the T
I hate the butchering.
Capitalized, or it's a purposely lowercase to
thank God it's capitalized. Thank God it's capitalized. But
all right.
Anyway, go ahead.
No, yeah, exactly. Marketing, you know how it is. So we got some cool stuff coming up for sure. It's going to be good. A lot of good interviews. We'll be dropping some of those names here soon, I think. But excited for that. All right, let's get into the gut check. Markets seem to have bounced a little bit. What are we trading at right now? 110,000. And I don't know about you, but I'm actually feeling really bullish right now.
Really?
Yes. Wow. And there's a number of factors, all the things that we always are talking about here. But the thing that got me actually, out of bed this morning and got me over to my trading console was this post from Ray Dalio, right? Ray Dalio, the hedge fund genius, the founder of the world's biggest hedge fund, isn't it? Bridgewater, something like that. All right, and the guy's getting a bit on in the years, but he's our wise. He's the wise. I don't know. Is he an old man just yelling at the wind?
Well,
I don't think so.
He's a different kind of. He's a nice counterpoint to Warren Buffett, right? Who thinks Bitcoin and crypto are rat poison or whatever it is he said, rat poop.
Yeah. All right. So Ray Dalio was interviewed for the Financial Times. There's a bit of controversy perhaps around the actual article that was written. Basically, people are saying that the Financial Times, just like as media outlets do, they focused it, they narrowed in on the controversy of like some minor controversial things, like about authoritarianism, and they basically implied that Ray Dalio is saying that Trump is just like a dictator, right? But that's not actually what he said. And Ray Dalio then went and published on his X feed the exact Q&A So it was an email Q&A, I guess. There were like 16 questions from the Financial Times, and Ray Dalio wrote up his responses, and then he just published those in an article on X. So bypassing the Financial Times. Anyway, so
that's awesome.
this one answer, question and answer, I thought this is what sparkled me, or got me a little bit riled up here this morning. So he said, the question was, could crypto meaningfully replace the dollar, or does it pose different dangers altogether? And the answer, crypto is now an alternative currency that has its supply limited. So all things being equal, if the supply of dollar money rises and or the demand for it falls, that would likely make crypto an attractive alternative currency. I think that most fiat currencies, especially those with large debts, will have problems being effective storeholds of wealth and will go down in value relative to hard currencies. This is what happened in the 1930 to 1940 period and the 1970 to 1980 period. So, yeah, I mean, nothing too. Those are sort of standard things that Ray Dalio and others like him are saying, but it's having it repeated here again. It inspired me to get out of bed and convert some of my staples into some non-USD investments this morning.
Nice.
Yeah.
You willing to divulge what you aped into?
The majority actually is boomer Bitcoin, aka gold. So on that note, right, gold broke an all-time high a few days ago, I believe. It's in all-time high share territory, and I just wanted to share actually something here, an interesting little tidbit on the gold, and this relates to Bitcoin. Just a sec. Share screen. Okay, so this is from X user Anand Krathi. Thank you for posting the chart, sir. And here we are showing foreign central banks' holdings. And the yellow line is their gold holdings. And in the 80s, it was actually, according to this chart, it peaked at 75%. So 75% of central banks' holdings were gold in 1980, according to this chart. That then depreciated. That percentage went down quite steadily all the way through to the late 2010s, and at that point it bottomed out, and now it's now recovering. And for the first time since 1996, gold now surpasses U.S. Treasuries as in a percentage terms of what central banks are holding. And it seems like this trend can continue. Thus, my purchase of gold this morning. Now, of course, Bitcoin is this is bullish for Bitcoin too, right? Because basically, the Bitcoin's at about for quite a while now, it's been at about 10% of the market cap of gold. And as the market cap of gold increases, so too does the market cap of Bitcoin. It tends to gap up and get back to that 10% number. So bullish for Bitcoin, even if the ratio doesn't change.
Yeah. Hearing the Dalio quote, or the answer from that, it makes me think that we might see like a divergence in what a viable currency is, right? Traditionally, it's been three things. Bitcoin and gold now, I think, are really seen as one thing, right? Like a store of value, not really a currency, and how we use it. And I wonder if you'll see that trend further kind of break apart, where to transact you'll use dollars probably, or whatever like that, and then to combat the debasement of fiat, you'll hold something like gold or Bitcoin, but you won't really transact in it.
Yeah,
did you see?
Well, I was just on that thought. Sorry, it'd be amazing if you could have all of your assets in a store of value or investments, and basically zero in cash, and then just like at the time of purchase, or when you like, it just converts to automatically to like the medium of exchange. So you're basically, your exposure to the asset that's just constantly going down in value is optimally minimized. That'd be cool. All right, go on.
Yeah, I mean, and I think you can do that programmatically. People probably already, like big players might already do that a bit. For small players like us, I think it's really easy. The problem is where you are talking about like major institutions or whatever, and they have to move like hundreds of billions a day to like settle balances and stuff. Then liquidity kind of becomes an important concern, and you'll lose a non-trivial amount on that swap in and out. And I guess you just have to do kind of some kind of equation to see if it makes sense to do that and how often you should do that. But I mean, I'm sure to some degree that's already being done. But similar to the chart that you posted, I saw one this week where the FX trade volume and the volume of like settlement for commerce was released. And yeah, so you see a falling amount of dollars held as reserves. However, dollars being used for like FX trading and commerce is at an all-time high. For FX volume, it's now at 90%. 90% of global FX volume is dollar denominated, right? So it's only gone up. And I think from 2024 to 2025, it went up 7%, which in these terms is incredibly large.
So this is supporting your theory here that the medium of exchange will not change, will continue to be the dollar, but the store of value will continue to be, the dollar as a store of value will continue to be eroded.
It might be up to a point. So I don't know. I mean, again, I listen to too many voices, right? There's people, really smart people from different areas who say, like, for example, treasuries will eventually do well again.
Yeah.
And then others like Mark Moss. Yeah. Mark Moss in my interview was like, no, that's it. They're done. This thing is like permanently broken now. And so they'll never be profitable again. I really don't know about that, but I see a couple things. I would predict a couple things. I think stable coins, US dollar denominated stable coins, are only going to become more important and more desirable all over the world. So I see that market increasing. I don't know if I would go to Arthur Hayes's like 10 or 11 trillion in like 3 years, but certainly like Besant's prediction of 2 trillion by 2030 seems reasonable to me as a base case. But yeah, since the total right now is 250, yeah, that's a very large increase. So then that would just mean that the use of the dollar is going to increase then, right? As a medium of exchange, basically.
Yeah.
So I mean that seems reasonable to me.
All right. Well, I think that this is a good actually transition to World Liberty Financial, because they have a stable coin, and the World Liberty Financial token started trading this week, not without controversy. Let's see if we can just get some basic facts here to set the stage. So the WLFI token. Well, first of all, no, let's just talk about what happened on the market. Okay, so the token debuted on Binance and OKX a couple days ago. The initial fully diluted valuation was $22 billion, circulating market cap $6 billion. That put it at a the coin market cap rank, like the rank by it's number 33, and it's in the top 100 from day one. Bigger than like pretty much any other DeFi protocol out there.
Exactly. Yeah.
And as far as I know, there's no actual product yet. So
no product.
That's interesting. Then, on day one, the price dropped to like 34%. It's dropped. It's continued to drop. Basically, it started out at around 31 cents, and now we're at 19 cents. So it's dropped about 50%. Less than 50%.
Yeah, there was a big drop
since launch. Yeah,
there was a big drop
right after launch,
Thursday.
but it's been bleeding out ever since. Really. So the team kind of panicked, it seems, and started trying to buy back the token. Apparently, they used around $3 million to repurchase tokens, not from any revenue, because again, there's no product, or there kind of is. I mean, we could. This is why the transition made sense. That we have USD1, the World Liberty Financial stablecoin, and that does make some money, right? Because there's about a couple, they've got a couple $1 billion in market cap there, and those are sitting in treasuries, earning some interest. But I think maybe this is a good time to get into like the structure of World Liberty Financial. Go ahead. Yeah.
If you want to, since we're talking about kind of the schedule of events, the next wrinkle, the next drama was basically, I don't know, a couple hours ago, right? When World Liberty Financial froze the wallets of Justin Sun.
Justin Sun owns 3% of the WLFI supply, supposedly.
Yeah.
Biggest holder.
There's, again, this is all unfolding right now. We don't really know the details, but there are on-chain indications that that his wallets, or wallets that he owns, have been frozen, and they've been blacklisted after transferring 9 million worth of tokens to HTX exchange. And the claim is that that Justin Sun might be selling tokens on exchanges via his users, and the WLFI, World Liberty Financial team, is worried that this is kind of like market manipulation, trying to tank the price of the token. And so
HTX,
they
is that
froze
Justin Sun's exchange?
Basically,
does he own that?
Yeah.
Okay.
I mean, I don't think he claims not to ish, but pretty much everyone kind of just shorthand. Yes, it's his exchange.
Okay.
But he was sending tokens. There's commentary in Chinese on X of tokens being sent from HTX to Binance and HTX to OKX, and it's just kind of a mess right now. What's happening, but it does seem like the World Liberty Financial team has frozen some of Justin Sun's wallets, claiming that exchanges are selling tokens, artificially lowering the price. Sun's response, or his team has responded by saying that, for example, the transfer of these WLFI tokens is just routine deposits. It's a small amount before they disperse more of the tokens. They're not buying or selling anything, and they're not trying to influence the markets. And they reaffirm that they have no plans to sell unlocked tokens anytime soon. So this is all happening right now. And it's almost to me like typical, it feels like typical Trump related crypto activity, this really reminds me of when the Trump token was launched, and then there was a long time, like hours of like, is this real? Is this really from him? And then everyone was like, oh yeah, it's legit. And then price went up, and then the Melania token got launched, and even part of their teams didn't seem to know that this was happening, and it wasn't coordinated. The Trump and the Melania token launches weren't coordinated together, and then that tanked the price of Trump. And there's all this. Everybody was like, "What's going on? Is this some kind of psyop? Is this on purpose? Is this 4D chess?"
Yeah.
So
the Trump
seems messy.
The Trump family reportedly owns 22% of the total WLFI supply. Trump himself is listed as co-founder emeritus. I'm not sure exactly what that means. His sons are listed as co-founders. If in Trump's statements he claims to not have much involvement, which I do believe that, but
I believe that 100%.
Yeah. Still, there are questions here, like perhaps rightfully so, about the the involvement of the state here. Anyway.
No, those are those. I think that's, though, Graham. I'm skipping ahead, but that's I think why people are buying this. That's why it's
yes.
That's why it's valued. That's why it's valued at currently around 5 billion market cap, having just been released with no product, and ostensibly as a fork of Aave, and then a pivot towards stablecoins.
Yeah. I full disclosure, I bought a small bag. Now, I bought the bag, of course, hoping for it to increase in value, but also because I know how my brain works, and if this thing starts doing really well, I'm just going to be so salty that I'd rather just have just like a little bit. I'd just like benefit a little bit, and then also it makes me sort of pay attention to it more. We're talking a tiny amount here, a couple $100.
Yeah. No, I bought a bag. I bought more than a little bit. I bought but we can talk about
you're
why.
Underwater then on that.
Definitely 18% roughly.
Okay. Yeah.
Now, I bought for a couple reasons, and none of them are for fundamentals, really.
Yeah, it's a greater fool thing.
No, I mean,
it's a narrative.
I'm being facetious, right? But I think if this USD1 thing, before the USD1 thing, I didn't participate in the, what's it called, the pre-sale and any of that.
Yeah,
but
those people did very well. People who participated in the ICO.
Yeah, but this USD1 thing to me is, I think, legitimate, and other people, like, I think we'll talk about the chopping block. They kind of just were mercilessly crapping on this.
Well, why is USD1 legitimate? What's so legitimate about that?
Yeah, I mean, because if Besant, who works for Trump, is pimping stablecoins to the rest of the world, it makes sense to me from a sycophantic way, not a good way, that USD1 is going to get a decent amount of that flow because it's associated with Trump, and that will be like legit fees and stuff, right? I think that it can legitimately grow. Maybe obviously not as big as Tether or even USDC, but it doesn't need to. And so I think just by the fact that it's close to power, and as long as as long as the people in charge of the company are, I mean, just have like the minimum level of competence, right? Security, minting the stable coins, redeeming them, actually being backed by treasuries and whatever short dated cash equivalents. They'll get flow for sure. I imagine 2 trillion over the next minimum 2 trillion. Besson says over the next 5 years, they'll get some non-trivial amount of that. Seems like they're gonna do well. And it's I was looking into World Liberty Financial, the USD1. Yeah. It's like an incorporated company in the US, so it's incredibly highly regulated from the get-go, which probably means that banks and whatever in the US can safely touch it. And it's like connected with Trump. So that's my thesis, and that's why I grabbed it. A bag.
Okay. No, that makes sense.
Now, is it worth this? I don't know. I'm probably not.
Yeah, but that doesn't necessarily matter. It's more about the narrative, isn't it?
Yes, definitely. And, so I was just at Bitcoin Asia in Hong Kong last week, right? And Eric Trump spoke. And man, It was so funny, dude. It was so funny. So he gave this like kind of fireside chat for specific holders who spent a lot of money on their passes, and I got to be there for media reasons. And Bitcoin conference. This is like the kind of should be the home of Bitcoin maxis and everything Bitcoin, right? And he's talking and saying things about Bitcoin, and you're hearing choo. Then he also talks about crypto. And every time he mentions crypto, I like look around with a big grin on my face, right? Seeing if anyone's kind of like, or, grimacing or anything like that. Holding fighting back their revulsion. And then he mentions stable coins. He talks about how important stable coins are. And he can't help himself, and he mentions USD1 by name, right? So he's like Bitcoin and USD1. And I'm just kind of like looking around like, this is okay? Okay. I don't know. It's you have this spokesperson who's going to all the Bitcoin conferences and all crypto conferences. He's going to be talking about USD1. He's going to be working with regulators all over the world. They've got 3 years of just like insane protection on this front. Again, I'm not saying this is good. I just, I've made a bet that it'll do well.
Yeah.
If they're like just minimally competent. So.
Yeah, I think that's a reasonable bet. I just want to point out perhaps the hypocrisy. So part of the narrative that the World Liberty Financial and Eric Trump here are trying to spin with the creation of this thing is right. The Trump family has been targeted for debanking, right? And that's the story that Eric Trump tells as to why he turned to Bitcoin and crypto, right? Out of necessity. Okay. And I believe that, and I think that's like that's great. It's there's nothing wrong with that. I'm cool with that. However, I noticed that in Eric Trump's keynote presentation at Token 2049 Dubai, he said, quote, "You can buy USD1, so you're no longer at the mercy of a government that you might not trust." And I'm just like, how does that? It seems like he's conflating the two things here. Okay, Bitcoin, fine, but not USD1, because USD1 is the US dollar, if not like an even more regulated version of, like, let's say you're holding cash, right? Like physical dollars. The USD1 is like surveilled, extremely surveilled. It's custodied by BitGet, I think. Hold on.
Yeah, where is it? BitGo?
BitGo. Not BitGet, sorry.
Yeah, I mean, and this will come into our discussion later about RWAs on Ethereum, but stablecoins are not the antithesis of crypto, but kind of in that direction, right? Stablecoins are a centralized thing by nature, at least one-to-one pegged, one-to-one backed by treasuries. Stablecoins,
yeah, USD1 is
centralized.
It's not a decentralized cryptocurrency. It's centrally controlled. Someone can freeze or blacklist addresses. It's BitGo, by the way, that custodies it. And it's backed by treasuries. So I'm not sure. Yeah, it's a you can buy USD1, so you're no longer at the mercy of a government that you might not trust.
I think if you're being generous, Graham, because I've heard him say this before. He's given this talk many times. I've personally heard the talk twice now. It hasn't really changed in 1 year, which is kind of funny. But if you're being generous, he's I think in the context of his entire speech, he's talking about non-U.S. governments. He's talking about governments that are less trustworthy than the U.S. And so you can take your local shitcoin fiat currency, turn it into good old American greenbacks on chain, and that's a lot more stable and reliable and reputable than your local, I don't know, emerging market currency.
Yeah. Okay. Fine. Yeah.
Anyway, that's the generous interpretation. That's a good, I still agree.
That is a good defense. I mean, I just saw this clip, and as always, these things are taken out of context. So, fair enough.
I would like to point out, though, just the funniest comment I saw on this was on the chopping block with Haseeb, who love this guy. I'm so happy that we got to interview him. But he said basically, I think this is a moderate paraphrase, but just slightly. He said, "World Liberty Financial is like garbage that has gotten into your living room."
Yeah, exactly. I really enjoyed that. I was listening to that this morning.
Holy crap!
He's like,
that's awesome.
He's like, basically, he's saying like, there's always an area of the crypto world that like the serious people just sort of like write off. Oh yeah, there's just people messing around over there. But in this case, it's come that garbage has like seeped into like your sacred space. It's like front and center now. So they also brought up like, okay, is World Liberty Financial going to be the thing people talk about at Thanksgiving this year?
Honestly, I don't think so. Like, let me just tell you a quick anecdote. So last Christmas, I'm home I go back to America. I see my family and extended family every year. And last year, same thing. And at one point, crypto comes up. I don't mention it the whole time. I just wanted to see if it ever came up. It just kind of came up. And so I was ready with just like some of the craziness. First of all, no one had heard anything. That was the biggest thing. No one heard anything. And then I was like, yeah, but it's pretty wild. This is when like all that crazy pumped.fun crap had just happened, where they turned off the live streaming, right?
That had happened, because people were like shooting dogs and stuff,
putting themselves in dog cages, and like eating, drinking piss and dog poop, right? I mean, just like shooting, like killing chickens. Beat, like, I'm gonna beat my wife if you don't like this kind of,
Yeah.
So I started telling my family all this, right? Like, there's this thing called Pump.Fun, and everything that we just talked about, and blank stares. There wasn't even incredulity. It was just like, what? Like, it was just.
Had they heard of Fartcoin?
It was almost like,
though.
No.
They hadn't even heard of Fartcoin. Okay, so your family's just like living off grid, I guess.
No, I mean, even my brother It was just like but it was also it was crazy though that it was just like I don't care. It was almost like I was speaking another language, and they didn't have the priors to feel outraged. Bitcoin, I think they can understand that, right? Like it's boiling the oceans and killing nature. But once you start introducing this other stuff, so I think if you get to like World Liberty Financial, maybe because it's connected to the Trumps, that'll upset the liberals, or as Corbyn would call them, the libtards. But
there are I gotta imagine there's a lot of media in the US who's trying to like talk about corruption, Trump corruption, and World Liberty Financial would be something that they point to. So you gotta see.
That's so boring.
It's gonna be in the
Don't you think like that's been said since 2016?
Yeah,
Trump is corrupt. Look at all this stuff he's done. And then that's continued. Look, it's even more corrupt. The corruption has never been worse than it ever has been. Like, so I listen to some of these people because I just want a barometer of it. And you've heard the same thing. And so I don't know, people are maybe desensitized to it up to a point, which is maybe not good. But.
Well, I mean, it must be said that with World Liberty Financial now trading at this like insane market cap, and with the Trump family holding 22% of the supply, like their World Liberty, on paper at least, their World Liberty Financial holdings are in the billions of dollars, which is greater than all of their real estate holdings. So it's pretty major.
I don't know, but it's not like I've talked with I think Jordy Alexander before and stuff. Is it worth 4.9 billion right now? It evaporated like 2 billion in 2 days. That wasn't real.
It's just on paper. Exactly.
Same thing was said of Trump, the Trump coin, right? Like this is now like 7, whatever it was. It's like, man.
All right, let's move on to Zach XBT and the KOL controversy. Okay. All right, so on-chain sleuth Zach XBT published a list of 200 plus crypto influencers and their wallet addresses from a project they were recently contacted by to promote. He published this on X. From the 160 plus accounts who accepted the deal, less than 5 accounts actually disclosed the promotional posts as such. Now,
did you get a deal, Graham?
Yes, and incredibly, nobody offered me anything. I don't know what's going on. It's so I don't know how much you dug into the list, David, but the account that's been commented on the most is the one at the top of the list. Username a titty.
I didn't even know this person. I did look at the list. I didn't know a single account. Well, I didn't know a single one.
That's one of the things that I think is really interesting about this. Let's talk about that. But first, let me just. So a titty apparently got $60,000 for a single tweet. Now, a titty has since responded, saying that he actually did more like 2 weeks' work. Come on, man. It wasn't just a single post. It was 2 weeks' work. Anyway, the point is, obviously, these people should be disclosing that it's illegal not to, in most jurisdictions, disclose that you're like being paid for the promotion. And hardly anyone is doing it. I mean, I don't know. Neither of us, neither you nor me, actually recognized any of the accounts. And we've got like, these guys are making tons of money. So it's just interesting that, I don't know, what does it tell you? There's crypto is much bigger than you can imagine. There's bubbles out there. There's corners of X that we who've been like following this closely for like 6 years, 7 years, 8 years, have no idea. And people are, and like, what's going on here?
Well, I mean, the first thing I thought of, maybe it's just the way my brain thinks, is like, oh, I'm old. These all seem like, I'm guessing these are like Zoomer 2024, 2023, 2024 accounts, right? They haven't even seen, I imagine all of these accounts haven't even seen a bear cycle, right? I'm guessing. And so I'm just like, oh shit, I'm old. I'm part of this older boomer crowd. And these are probably just like 20-year-olds talking about whatever the hell coins they talk about, to their other Robin Hood crypto buying TikTok follower people, you know. That was my first
I thought that
takeaway.
as well. But then also you could perhaps argue that there's an issue here with like the way that X and other social media platforms sort of like only show you what you're used to.
Yeah,
that's just the way they're designed to optimize engagement.
Yeah, but I mean that's the problem with algorithms. There'll always be some how do you say, mediation. There'll always be some kind of hand on the scale, just because there's so much slop. There's just like an avalanche, an unending stream of content. For me though, like I mean I get your point, that your initial point that like, oh, this is illegal and they should disclose. I agree.
Well,
in an
obviously.
ideal world, I agree in an ideal world, but I also I also think, but maybe this is just because I'm callous now to this, and having been around for 7 years, 8 years. It's just like you eventually realize that anyone who talks about stuff, you should just automatically assume that they're talking their bags. And this is not just true of crypto. You can't just say like this is crypto. When BlackRock manager gets on and he says like, XYZ stock is a good buy, there's no way in hell he's not loaded to the gills with that, and is probably told all his traders, I'm appearing on CNBC. You better sell into this incoming liquidity. How is that not illegal?
Yeah,
that's but that's legal. They don't disclose it either.
Yeah,
by the way,
right. Yeah, you're right. So in the defense of these KOLs, they're just trying to get their nut.
Yeah.
and everybody else is doing the same thing.
I don't like it. I think it's scummy, and I hope I never do that.
Yeah.
There's always a price, though. There's always a price, Graham.
Exactly.
But hopefully it's too high to be like realistic. But I'm seriously, I think there are people you can trust who won't do this, but it's just
obviously I mean the other thing is that these projects that are paying this, I'm just like, how does that make sense? Like they're
probably pump and dumps, right?
That's all it is, right? They're just trying to pump the price. It's not. There's no way that could be sustainable.
It's extraction. It's just the extraction game.
To So it's dirty.
It's dirty. It's probably just some meme coin crap, and they spend, I don't know, 5 million, 6 million, and they extract 30 million. Something like that. And I've seen similar things. So this kind of list comes up every, I don't know, 6 months, 8 months. Like this is like the third or fourth time I can remember this cycle. And I've seen there's even some, it's either Zach or some other people who have like listed out the money that these meme coin scam businesses print out, and it's something like they expect the meme coin to hit like 100 million market cap, 50 million market cap, and then the money that they can extract from that, right? Let's say it's 100 million, they can extract like 25 right? Because that's not real money, right? The 100 million is not. That's what you see on the screen.
Yeah.
But the actual money that goes in that they can take out is like 25, 15 million, 10 million, whatever. And so then they budget that. They're like, okay, I think we can get this meme coin, this piece of crap, to 30 million. So let's spend 2 million to buy KOLs. And then they get like 5 million out, 10 million out.
Yeah.
Just, yeah.
Yeah. So, like from a trader's perspective, I guess you can play the game too. You can be like, okay, I know what's happening here. The intention is to pump this coin and then dump it. So as long as I get in early enough and out early enough, then I'm happy. But of course, somebody has to lose. So
99% of people have to lose, I think, right?
Exactly.
You have to. You're taking all these people's money and you're putting it.
Exactly. So if you want to play the game, you better be good at it.
Yeah. And now, like, even I think, was it Jordy? He was talking to Jordy Alexander. He was talking about how, like, quickly these trenchers act on now. Like the 5 minute charts are too slow for these like trenchers. And he's like, he's seen them work, and he's seen them traders who are not trading on inside info. They're just trading. They do it on like the 30 seconds, right? Or the 10-second time scale or something. It's just like insane, weird dynamics. I'm old, Graham. I'm old. This sounds dystopian and terrible and not fun. I don't like it. But, you're a Zoomer. You're a 20-year-old Zoomer. Instead of playing first-person shooters like I did, Twitch games, you're sitting there with your Red Bulls and your amphetamines, looking at the 1 second chart. And good on you, I guess. But that sounds awful.
Yeah. Well, gotta make it somehow. All right. Speaking of making it, Ethereum. Let's talk about
Not gonna make
Ethereum. Is Ethereum going to make it as it relates to real world assets? David, you went into the great bankless debate.
Yeah, so I love the guests. Omid Malikan and Austin, I forgot his last name, darn it, sorry. Both great accounts I follow, and I agree with so much of what they say. And they had a debate, which means they were they didn't agree on many things, which is awesome, right? When you follow two people and you agree with a lot of what they say, and then they get together and they duke it out, everybody wins. And I thought this was a great episode. I recommend everyone to watch it. And I just wanted to talk with you about it because it's kind of I thought they both had good points, and I think anyone can kind of weigh in on this because it's just an interesting thing to kind of mull over a little bit. But the basic idea is Ethereum the appropriate place for real world assets, right? Is this the chain that real world assets should really kind of live on? And you have Omid on one side, and I'm just going to simplify things, and Omid on one side saying that he's always thought that Ethereum is going to win because it is aside from Bitcoin the most decentralized and the most credibly neutral and immutable, and that will matter to people who have big boy money. So it might not matter now, but in the future, it's going to be kind of like a settlement layer, and the rest of the blockchain economy will kind of like live above it. And when things need to settle in hundreds and trillions of dollars, it'll be on something like Ethereum and Bitcoin. And then you have Austin on the other side, who said that RWAs range from things like stablecoins, which are the chief case for RWAs now, but they also extend to anything that you want to tokenize in the real world. For example, real estate. Pokemon cards are a big RWA on Solana right now. Have you seen this craze, Graham?
No. That's interesting.
Yeah, I think it's anyway. Those are all RWAs, and basically you're tying a real world something in the real world to a token on chain. And he's saying that because of the way the real world works, it's basically incongruous with like code is law, full decentralization. And the example he gave in this podcast and that he's given online and other podcasts before is, let's say you have some tokenized real estate and it's in, I don't know, Manhattan, and the Lazarus Group out of North Korea is able to scam someone out of that, and so then they hold the decentralized tokenized asset. Is the U.S. government going to then be like, oh, sorry, damn, North Korea now owns this real estate, or are they going to go tell North Korea to go F themselves? And that's it. Like who cares about the RWA? I mean, I think that's in that case, it's obvious what's going to happen, right? But that's kind of illustrates the extreme. And basically, it means that real world things are going to be they need a level of centralization that are kind of incongruous with something very decentralized like Ethereum, right? The government, the U.S. government, is a centralized authority, and they're not gonna listen or follow things like this when they happen. And you can kind of move that back. And he gave examples of Tether and stuff. But anyway, I've been talking for a while. I don't know if you want to ask me any questions about that or give some thoughts.
Yeah, I feel like this debate has been going on forever in crypto, ever since like Chainlink was launched. Like, I don't know, or I mean, it's related to oracles as well. The same sort of issue. Like, I mean, just because something it says something on like just because the blockchain says something, that doesn't mean that's what actually happened.
Yeah. But I think where it matters, and this is where I think you will be inclined to speak more because you hate Ethereum, is
that's only because I sold all my Ethereum. All right.
I know.
Full disclosure.
The reason that this matters, and the reason that at least this is my interpretation why they're having this debate now, is one of the biggest reasons for people saying Ethereum is important and is valuable is because it is the stablecoin chain. It is the RWA chain, and all the stable coins and all the value of stable coins are predominantly on Ethereum, and that is true. Yeah. And so the issue is, will that continue to be true going forward? And basically what Austin is saying is hell no. It'll move to like permissioned chains, like a consortium of like banks. US banks will make their own L1, and you're kind of already seeing this with like Circle and Tether making their own L1s. And he's saying that that's not only is that good, it's inevitable because you can't have RWAs on something truly decentralized, and so they'll move away. And Omid is saying no. Ethereum is valuable, and RWAs will live on Ethereum. And the reason that all these RWA stablecoins are on Ethereum is because it's decentralized.
Yeah. Do you lean either way on this debate?
I want to hear your opinion first before I give you mine.
Well, yeah, it's tainted by the fact that I no longer hold Ethereum. So obviously, I think it's the permission chains are what's going to happen, and the whole Ethereum is decentralized, so that's why people are going to use it. I don't buy it.
Yeah, I honestly, I'm not exactly sure, but I think I agree with so much of what they both said in this debate, which makes it hard. But I think that you can maybe separate stable coins out from like real estate. I think I think real estate will probably, I imagine real estate and things of that nature will kind of be on more permission chains. But what I think will happen is you'll have like a Fed chain or like Merrill Lynch chain or whatever the hell they're doing, right? And they will issue stable coins on that chain, and then there'll be like probably a central neutral chain where stable coins go out from that permission chain to the neutral chain, and then be traded there. But then you can revoke it through the centralized kind of chain, like, you know what I'm talking about? So
what's the point of that?
So
how does that help anyone?
So yes, this is the why would that matter? And Omid makes this point, which is China doesn't want to be on the doesn't want to deal with assets on Fed chain, right? Like they don't want, and Chinese nationals, they would rather be in some other thing, right? Like, so maybe they'll have their own chain to issue their stuff, and then we'll have our own chain to issue our stuff. But then when they interact, you could have like some kind of neutral chain / internet where those things can go in, and then they could have some kind of more neutral interaction, which would be like credibly neutral, immutable. The transactions can't be changed into that nature. So I don't know. That's kind of where I think I am right now, just having listened to this. But I think my crappy answer is basically they're both right. In that a lot of RWAs, including stable coins, a lot of, maybe the bulk of it, will be on these like permissioned, more centralized chains. But then when large actors want to interact with each other, including you and I mean small players, you're really going to like a neutral place where transactions can't be just reverted or reorganized, right? Like a reorg, you know. And that will be very important. I think maybe. I don't know. Now, is that Ethereum? Does it have to be Ethereum? I don't know. Well, I think maybe it could also be Solana, to be honest. Or
all right, well, that I can get behind.
Exactly.
Okay, well, it's an interesting debate.
Yeah, and I've really thought a lot about like what it is Ethereum. Like, I'm still haven't really decided in my own mind. Like, is Ethereum, is the decentralization of Ethereum, like, how valuable is it versus something like Solana or even other things that are a bit more centralized. And I still don't really know how that's going to work. I've thought in my mind these days, and I hate using this word because it's one of these like crypto VC Silicon Valley buzzwords that you hear, but I do think there's a lot of path dependency on this, which is to say, and in this case, I really do think it's true. Like, is it better to be more centralized like Solana, and then over time, because there's a lot of transaction volume and a lot of like performant applications, which then allows you to grow a user base and revenue, and then become decentralized as you grow out, as you get bigger? Is that the way that this is going to work, or is it okay to be slower and crappier and not work very well and have your blocks be empty and from like blobs, like the Ethereum style? Can that also work? I don't know. But my guess is maybe that it is that Solana can catch up to Ethereum, just because it just becomes way more popular, you know?
Yeah. All right. What else you want to talk about? You want to wrap it up?
Last thing. No. Last thing. This is going to be a theme for me, dude, moving forward I think for the next, I don't know, 5 or 6 months. Obviously, I'm biased because I live in Japan, but this is on Japan. And so Hasib, again, going back to Hasib, we interviewed him at WebEx. You and I were at WebEx. We live in Japan. And he had this great post. Can you put that post up? Talking about Japan.
Yeah, I actually heard him talk about this as well on, I believe, 2 weeks ago on the chopping block.
But he's basically really, really bullish on Japan as a growing crypto hub. He calls it, quote, Japan is a sleeping giant in crypto, GDP close to Germany, India, population more than 2 times larger than Korea, but relatively low retail trading volumes today, and few world stage crypto companies. Only 5% of Japanese retail trade crypto versus 25% in Korea. And then he goes on to some other things. But it heartened me to hear this because obviously I live here, but also it really kind of anecdotally meets with what it's like to live in Japan. For WebEx, we had a segment where I was in Shibuya, kind of the hub of youth in Tokyo, and I asked a bunch of people about Bitcoin and crypto. And as I expected, nobody knew anything, right? Like no one knew anything. It's crazy. They'd heard about Bitcoin, but they didn't know anything. They didn't even know like ballpark what the price was. That's how disconnected. It was just a complete, yeah, I've heard of it. Do you know the price? No one's even close. So it's the penetration is I think really low in America. Oh, sorry, in Japan compared to like America. And then as Hasib is talking about, like there's all this money, and so I also have been thinking about this a lot. I think that he's right. That he goes into some other things. I encourage you to read the X post. But in addition to the points he makes, the thing that I would add is that there are kind of like deeper, kind of glacial movements that make Japan very appealing to crypto. And you've seen this with even Warren Buffett. He moved into Japan in 2023. He was like the first big. He moved into Japan and bought equities for the first time in like 3 decades or something. And he bought the 6 biggest banks. He just went down 1, 2, 3, 4, 5, 6, and he bought huge amounts of huge percentages of these banks down the line. And you've seen the Nikkei hit all-time highs again for the first time in 3 decades. What's the reason? Why now? Why is Japan doing this now? And there are a couple big reasons. Number one, the boomer demographic of Japan it has accumulated an incredible amount of wealth. It's a saving nation. They've saved a ton of money, invested a ton, but they've invested in incredibly safe bonds or bond-like assets. Really low risk, very little yield, like sub 1% yield, right? Why does this matter? Why did they do that? Well, there was no inflation in Japan for 3 decades. That sounds insane, but if you were in Japan 30 years ago and you bought a carton of milk, it was the same price 5 years ago, which is crazy if you think about it from a Western perspective. 30 years, prices didn't move, which is crazy.
But now it is moving. And so therefore people are like, wait a minute, I need something that's giving me yield. Because my savings are getting inflated away finally.
Yes. So that's happening. That low yield thing doesn't work anymore. So you have to kind of get out of the bonds. There is the Japanese bonds are doomed. There's no way. That's just a done thing. The yen is also kind of done. The government is in like the government and the central bank are in like a lose-lose situation. We don't have to get into it, but basically, there's no way. So that's one thing. Then there was a story in like the FT and in Nikkei. I saw these in the past couple of weeks. The boomer demographic in Japan is quite old, right? And they're beginning to die in large numbers, right? And they're bequeathing the vast amounts of wealth that they've saved over their lifetime, and they don't spend it here in Japan, so they just have it. They're finally bequeathing it to their like millennials kids, and their kids, number one, they're younger, so they're way more risk tolerant, and number two, the kids realize that we're in a new regime where that old style doesn't work, and you've already seen that money being diversified into a new set of assets, even in equities, right?
Yeah.
More akin to America. And so this is only going to accelerate as the boomer generation gets older and more die at a higher percentage. And all that wealth is going to start entering the market into way out into the risk curve. This is perfect for crypto, right? Crypto, especially Bitcoin, has this like narrative. It's digital gold. It's a hedge against fiat debasement and inflation. Japan has a huge inflation problem, relatively speaking. The yen is depreciating faster than any of the major currencies, I think. The bond market is a mess. Also diversifying into riskier plays in terms of like technology. There's a lot of money. Crypto's underdeveloped here. Huge opportunity. I agree with Hasib, and I think that that Japan has a lot going for it in terms of growth in that way.
Yeah. And the other point I think that you didn't mention is the taxation of cryptocurrency has been a major headwind for the people trading crypto here. It basically gains that you make on cryptocurrency trades are treated as income, and so therefore they can be taxed as high as an effective tax rate of 55%, depending on like how much income you have, sort of added to your income. And so that's part of the reason actually why Metaplanet, the Japan DAT, has done so well, because people are allocating to it as a replacement for Bitcoin for the tax arbitrage, basically. Because stock gains are only taxed at 20%. Now, there's been talk of the Japanese government changing the taxation rules for cryptocurrency. And I think, who knows if that actually happens. I feel like it's inevitable. And when that does happen, that'll be another tailwind for crypto trading in Japan.
Yeah, just anecdotally, having lived here and talked to companies, that tax rule, when did that go into place? Effect, was that 2022 or 2023? But basically, I remember when that new rule came into effect, that 55 up to 55%. Pretty much every crypto business that was in Japan left. They all just mass exodus. They got the hell out because it was just like, well, we're not doing this. And it just wiped out the crypto business market in Japan. And I mean, I talked with some people in business at a smaller conference earlier this year, and they're like, yeah, it's a huge misstep, and we're really trying to attract companies back. But you had things like Coinbase and Kraken. They closed down their Japanese businesses. They're like, yeah, we don't need this. They got out, So it's a huge problem. It doesn't sound like a big problem, but it's a major problem, and it needs to be fixed.
The other thing is with the centralized exchanges in Japan, they are extremely draconian. They have extreme regulations on them in terms of the coins that can be traded on them. Like obviously, no privacy coins are allowed, but far beyond that, it's like if you look at all, there's like a few big exchanges in Japan. They have like 10 assets each on them, and they're not allowed to have like anything else.
Yep.
So that needs to change as well.
Yeah, I was talking with the backpack founder Armani Ferrante, because they're based in, at least partly based in Tokyo, and the listing process for assets is ridiculous.
Yeah,
insane.
Yeah.
From
what I understand, it's a self-regulation system, and basically that has kind of turned it into a bit of a mafia, where the handful of exchanges that have the license are basically like, well, okay, you can't get a license because that would be competition for us.
Yeah, that's what I've heard the same too. And there's basically been no new exchanges for a couple years, I think, right? Like there's like 14 licenses, and that's it.
pretty big regulatory overhaul and tax overhaul needed in Japan, I think, for Hasib's thesis to play out. But all the other sort of bigger macro picture things, I think, are in place. So just needs the politicians to do something, I guess.
Yeah, there's one other thing that I think is a huge tailwind, which is China officially taking over Hong Kong. And Hong Kong is, I think, kind of out as a crypto hub, right? It'll still as a crypto hub for new businesses, right?
You need a new Asian hub to replace Hong Kong, and
Singapore and Japan,
but yeah, exactly. So that could be an opportunity.
Yeah.
All right, David. That was an interesting discussion. Stay safe out there. Watch out for KOLs shilling their coins. I don't know. World Liberty Financial. Do your own research on that one.
I like how you start with that and then mention World Liberty Financial.
That's right. It's a good thing I only have like a couple hundred followers. No one could accuse me of being a shill. All right. That's it for Bitcoin.com's Token Narratives. We'll see you next week. Thank you, everyone. Adios.